talk some economics. We got Mike Faulkender, chief economist at the America First Policy Institute, and Breitbart's John Carney. Gentlemen, welcome. John Carney, you're kind of like the day-to-day guy with your great Breitbart bulletin. So the Atlanta Fed marked down its GDP for Q2 to 1.8%. They were above 4 at the beginning of the quarter. As you know, the first quarter was 1.3. A lot of this was because of the slump in manufacturing. And today, the JOLTS report showed that job openings continued to decline. So it looks like a slump is in process, John Carney. What do you think?
So the 57% decline in GDP now is probably overstating what happened. There's no way in 3 weeks that the economic data really changed that much. So I would be a little wary of reading too much into that decline. But I do think that there's real signs of a slump happening in the economy. If you look at the way the stock market has been responding to economic news, it's gone from reading bad news equals good news because the Fed's going to cut, to bad news actually being bad news. We were up a little bit today, but not by very much. You would have thought that if we got a weak JOLTS number, that the stock market would have thrown a big party today because the Fed could cut. That didn't happen. I think it's because investors are becoming wary about what's going on in the economy.
But, you know, Mike Faulkender, it's the business side. I mean, yes, real retail sales look very sloppy in the first part of this year. OK, but the ISM manufacturing report dovetails with lousy numbers for industrial production, manufacturing production, and the production of business equipment and machinery, right? That's the business side or the supply side of the economy. And that'll drive things down. I mean, in some sense, if you look under the hood, it's business that really drives the economy, not the consumer. You know, there's this gross output model. I don't want to go into it. We don't have enough time. But I'm just saying business-to-business spending is very important, and it looks very slumpy, Faulkender.
Yeah, we're seeing weakness in quite a lot of places, Larry. As you said, the ISM numbers seem pretty weak, the industrial production numbers. But also, if you do go back to the consumer side, the disposable income numbers for the last 3 months in inflation-adjusted terms are flat. They were down in February. They were down in April. Very minor increase in March. If you look at the PCE number that came out last week, you know, which is, of course, the biggest contributor to the GDP number, it was down for the month of April, which April is the biggest contributor to the Q2 number. And so it does seem like there's a slowdown on the consumer side. You've got all the things that you mentioned on the business side. Couple that with the fact that the Biden administration is just in overdrive in its regulatory zeal in order to get a bunch of rules out that are going to continue to slump business investment. And it's no wonder that you're seeing this reduction in forecasts of economic output.
Yeah, well, we talked about last night with former Energy Secretary Rick Perry. We talked about how the Biden administration wants to jail oil and gas CEOs. You know, what a fun thing to think about that. Trump's not enough. They want to go after oil and gas CEOs. Who knows? We may all be next. John Carney, with it all, the Fed's not going to cut rates, though, is it?
No, the Fed's not going to cut rates. One or 2 months of weakness is not enough to get them to cut. There are people who are saying that they're going to cut in July or September. I think there's no way they cut in July. The September one would just create a political explosion. Plus, Larry, I do want to say that there are some signs that while April was very weak, May have had a little bit of a rebound. If you just look at things like jobless claims or the S&P global PMI, it's kind of indicating that April was bad, May might not be as bad. So, you know, the GDP now number is pretty much all April numbers right now. We're just getting in May. So we could actually see a little bit of a rebound.
Yeah, I take the ISMs over those S&Ps, but that's just me. That's just my view. Mike Faulkender, we've been talking, obviously, about Joe Biden's faux attempts to curb illegal immigration. How much of a hit are real wages taking as a result of this pandemic of illegal immigration?
Well, you know, Larry, back in the Trump administration, we had the blue-collar boom that you and I have talked about so often, and a lot of it came from the fact that we finally had some labor pressure on middle and lower income jobs because there wasn't this flood of illegals that was putting downward pressure on wages. And so for the first time in quite a long time, you saw industrial production workers and non-supervisory workers seeing higher wage growth than managers and supervisors. The bottom half of the income distribution was seeing higher wage increases than the top half. When you actually have a competitive labor market for low skill and medium skill jobs, you're going to get better outcomes. Whereas if you flood the market with illegals, you then allow them to have work permits so that they immediately enter the workforce, that's going to depress wages, particularly at the lower and middle income portion of the distribution.
Yeah, we looked at some numbers last night. You know, real wages went up, I think, I don't know, per family or on average by, I think, close to $6,000 during the Trump years, all 4 Trump years, including the pandemic.
That's right.
Real wages under Biden have fallen at over $2,000. That's an $8,000 swing. It's quite remarkable. I think that's why the polls are as bad as they are. John Carney, you've written about this. Fellas, I don't have enough time. We're all hassled here with this Biden immigration or faux immigration or whatever it is, but we appreciate you coming on very much. Thanks, Mike Faulkender and John Carney.